Hello, thank you for joining this session on digital transformation. It's called the Digital Transformation Toolbox, Preparing for the Future of Accounting. I'm very excited to announce our speaker, John Hetherington, who has led technology projects for over 25 years and who is an expert in digital change. John has 10 years of strategy consulting experience with Deloitte and EY and has worked in the technology industry both in the United Kingdom and North America. Today, John will be discussing how technology is transforming accounting and how to future your finance career. It's easy for me to say. I'd like to welcome John, who will be on the screen here momentarily. There you are. Hi, John. Nice to see you. And
Good afternoon.
yeah, you can go ahead and share your slides. Okay, perfect. Thank you. All good to go.
So I want you to imagine the year is 2030. Think ahead to the future, and the world of accounting has been transformed as we know it. We now meet our clients in a virtual reality metaverse where we collaborate in real time using instantly accessed real-time data, and then we use artificial intelligence to make recommendations. The days of number crunching, transaction work are all behind us. This means we add more value to our clients. And when we get busy, we can onboard people and recruit people from anywhere in the world instantly. The onboarding process is painless because we're using immersive job simulators to train new staff, similar to how we use flight simulators for pilots today. Our customers can buy insurance products, financial services products instantaneously. And it's cheaper for them. It costs less because there are no middlemen. All the data is securely saved on the blockchain, and claims are paid instantly using smart contracts. And then after a long day working, we've missed the start of the big game. But it doesn't matter because we can join the game in a virtually immersive experience using our VR goggles, and then use NFTs to get exclusive access to chat with players, perhaps ask them how badly they played, and then buy limited edition merchandise and jerseys. So how does this all come about? How do we get to 2030? It's because we're going through a digital transformation of accounting, and there are key trends changing our future. So what are these key trends? So the key ones are automation, artificial intelligence, data analytics, Web3 and blockchain, and cloud. So these key trends are coming at us fast and hard, but you're already busy in the day job, and this is going to be pulling on your time. And it's not easy to look at these trends as well as doing your day job. I get it. So with your day job, you're also having to deal with reporting, the building credibility with clients, your managers, your stakeholders. You have to stay current with accounting standards, and you're fixing data errors as well as managing people. But I want to hear from you. What are you finding most challenging about accounting right now? And we're going to launch a poll to see where you think those challenges are, and comment in the chat if you have something else that I've not listed here. So you should see the chat pop up in the polling just to the right of your screen there. And then we'll give you a few seconds to answer, and then we'll share the results. Okay, has everyone put in an answer there? I'm just going to check the chat as well, see if anyone's made any comments around other things that they're seeing challenges with accounting. Okay, are we able to share? Let's end the polling. Are we able to share the results? Okay, so fixing data errors coming in at the 14%, but the biggest one by far, the 41% staying current. It tied with the pace of change and then building credibility just in there. And this is really interesting. So this is very similar to exactly what I'm seeing with all my work with my clients. The pace of change and staying current is the eternal battle that accountants face working in the industry today. So how can I help you? How can I share information to get over these challenges? So you're in the right place today. If you want to know how to get rid of boring transaction work, if you want to know how to work with only the best clients, and if you want to know how to grow your business using digital, you're asking, John, what is the answer? How do we do this? Well, the answer is this digital transformation toolbox. So these are my 9 toolkits within my digital transformation toolbox that are helping shape accounting from a digital transformation point of view, but more importantly, helping you prepare for the future of accounting. So today, there's 9 here. So today, we only have a limited time. So we're actually going to cover 3 key trends. These are the ones you can focus on right now today, the ones you can look at next, and the ones in the future. And those 3 are: now, automation. That's something you can do right now, take away from this session. I'm going to show you how. Next, look at how to become a trusted advisor. And then in the future, look towards Web3 and blockchain. So today I'm going to cover these 3, but not only that, a couple of bonus items. I'm also going to give you a technology assessment framework, and I'm also going to share some implementation best practices. So that's what we're going to cover today. But you're probably asking, John, how do you know this? What's your experience in this area? Well, let me tell you. So I love technical things. Ever since I was a young lad, I loved technical Lego, my 8880 kit there that I bought I got for Christmas when I was a youngster, and actually rebought off eBay a few years ago and paid a stupid amount of money for a 1980s Technics Lego kit. And then my Tamiya Fox, my radio controlled car. I love technical things. So as I went through my career, graduated in electrical engineering, got my first job, then got qualified into my project management certificate and my certified management consulting. I suddenly thought, well, why isn't life easier? I'm qualified, I'm technical. Why am I working harder than ever? And what I realized is I'm a classic introvert. I was hiding behind my desk. I wasn't adding value to others. I realized this. And then once I realized that I could apply my value in the technology space and help, more importantly, share that value to help others, that's when I really broke out of my shell. And more importantly, my career took off. And now I love helping CPAs and finance professionals deliver their projects faster. So now I want to share this with you. The whole reason for me paying this forward is you can take this, share it with your team, share it with others, and I'll happily send you a copy of this presentation. If you just drop me an email there, I'll send you a copy of this presentation, and then feel free to use it with your teams. But first, let's define digital transformation, just a level set on that, and then we'll get into the 3 key trends that we'll cover today. So digital transformation, very specifically, is overhauling a process and then applying new technology to create customer value. The reason customer value is in yellow bold there is because that's the important thing. It's not about just applying a technology upgrade. It's not about a big project, can be quite small. And it isn't about just going paperless, just going digital. It's about adding that value. It's about having that goal in mind. So if we want to, what I want to do now is give you an example of this. So if we were to working with a manufacturing client, one of my previous clients, we introduced inventory management system. That was a technology on its own, but that wasn't transformation. What we found is that to make true transformation, we wanted to make the whole enterprise run more efficiently and ultimately save cost. So the inventory management system was just one technology enabler. We then translated that information from the inventory management over to finance. So finance could then understand the inventory, and more importantly, because inventory management was much better, we could free up capital to apply to the budget and the forecasting. So our budget and forecasting became more accurate. As a result of that, we could then identify costs that we could save because we're using less budget in the inventory management area and apply that to business development. That's transformation. The technology to the finance, the process, to the cost saving. The goal was that cost saving, which enabled growth. That's true digital transformation. So now you know what digital transformation is. What I'd like to hear from you is, where are you on your digital transformation journey? So here's a definition. What's your level of digital transformation? Are you a laggard, number one, an explorer, a player, a transformer, or a disruptor? So we're going to launch the next poll just to get your views on where you are in terms of your digital transformation journeys. And let's see where this lines up with some of the other client work I'm doing on accounting digital transformation. And again, you may be in more than one category. You may be a bit of explorer and a bit of player. Go with the most where you think you most are. Realize now I should have got some music, maybe the Jeopardy music, to play while we're doing the poll. Okay, I think we'll call it there. So let's display the answers for that poll. Okay, so what do we have here? So explorers 38%, got players at 17%. Where have we got there? Transformers at 26%. Then a few disruptors, 7% disruptors. Wow. Okay, and 9% there in laggards. I'd love to hear from the disruptors in terms of what industry you're in and what are you doing. Feel free to drop a note in the discussion or send over Q&A, because I'd love to know which how you are disrupting, especially disrupting the accounting industry. I know from later on there's a discussion pod with Obid Maurice, who I actually met at a CPA conference a couple of years ago in Banff. He's doing some awesome work disrupting finance and accounting. So maybe it's him, but if not, I'd love to hear from you. And more importantly, share this with the group as well, because that's part of the learning of these sessions, is sharing information between us is what these sessions are so good at, especially in this virtual reality environment we have. We can't mix and mingle as much. So feel free to put some comments or chat, and I'll check those throughout the presentation. Someone just asked it around which technology gives the most bang for your buck. And by the way, you can ask an anonymous question, so please feel free to do that. So again, which technology gives the most bang for your buck is one of the questions. So I'm going to jump straight in. For most of my clients right now, it's automation. And I'm going to jump into that right now. So that's why I have this as today. What technology would you start on if you're going to start any sort of digital transformation journey? So automation is using computers to automate tasks. Pretty simple, right? But the reason I start with this one is because the opportunities are so huge. And accountants, being very technical, typically have the process nailed down. So when you have a process understood, it's very easy to say, okay, let's redesign the process and then automate it. And just to remember, a word of warning around automation before we get into it: a bad process automated is still a bad process. So you need to make sure that you're not just automating existing process. When you're applying the automation technology, which I'm going to come on to in a second, you need to make sure that process is solid and well established. And more importantly, you have a very specific goal. I'm going to talk about that in terms of the best practice implementation shortly. So let's look at automation first. So here's I love this chart because it's from McKinsey, and they show how difficult or easy a process is to automate. So I'll just give you a few seconds just to quickly look at the chart and the areas on that list. So this was from 2020, so it's a couple of years old now, or just under, but it's still very accurate based on what I'm seeing today with working with my clients. Do we have any rev management or cash disbursement folks on the call? The top half up here, because those are potentially very fully automatable. And what about risk management? Do we have any risk management folks or audit folks on the call? because again, they're fairly difficult to automate. Doesn't mean they can't be automated. It just takes more time and effort to automate. And the point is that I'm trying to make here is that technology is a tool that you apply to a process. So just because it's difficult to automate doesn't mean you shouldn't do it. I actually agree with external relations, business development are probably things that are very few opportunities for automation, and they are most difficult to do. Excuse me 1 second. Oops. Whereas audit, for example, and risk management, there is opportunities within those processes to actually automate that. But you have to be clear on what you're trying to automate. But before we dig into exactly the technology, let's just do a quick pulse check. So based on this information, let's do another quick poll. As accountants, where are you seeing opportunities for automation? Do you see it in closed consolidated report, the audit, invoice processing, or accounting treatments? Or other? Have you already done automation? And what results have you seen? And again, this is really useful to share with the group because knowing what others have done will really help others on the call know where to start with their automation journey. So let's see that. We'll go to the poll on the right-hand side there and jump into the questions. Again, I'll just check the Q&A to see if any other questions have popped up. And Jennifer there, thanks for raising the point there. You've automated invoicing. Yeah, that's what I'm going to go on to that next. It's actually one of the quickest. If we're going to automate anything, that gives a really good bang for the buck because it enables automatic payments, which we'll come on to a second. Yeah, big win. Yeah. Okay, so let's show the results for the polling. Okay, so invoice processing 68%. Yep, that's pretty common what I'm seeing with my clients as well. Accounting treatment 8%. That's good to see. It'd be good to see what the others are in the chat if you could let me know because I'd love to know what other automation you folks are doing. Closed consolidated report 10% and audit 6%. So this is really interesting actually because a lot of work I do with my clients actually focuses on the closed consolidated report. And when I say automation, I'm talking about the flow of data. And that's really important because when we think about automation, it doesn't have to be a big bang project. So for example, of automation of invoices, typically that's generally a big project from what I've seen. And work I've done with my clients, typically a multi-month, if not nearly a year's worth of work. But the results are worth it because with the information on the invoices, which are scanned in automatically, you can then look for trends. You can start to consolidate vendors, start looking for fraud in invoices and anomalies. And the reason we do this is because when you start with automation, it is a quick win. Even if it's the invoice processing, you're going to get results very quickly. Even in that year-long project, you're going to get results quite quickly and good return on investment as well. It frees up time. So I remember me mentioning about the year 2030 when we're now having to have transaction work as a thing of the past. This is where automation steps in. It frees up our time to work on more strategic opportunities. It was interesting. I was working with a client and we automated a lot of the closed consolidate reports process. We actually reduced 30 days from the accountant team over the whole year. So 30 days in a year, nearly over a month is a really good result. I then asked the accountants, okay, we've freed up the 30 days. What are you going to do with your time? The answer will be interesting to you because when I asked, what are you going to do with the time? They came back and said, allows me to just do my day job because they were already overworked. So that's not ideal. But what we established is that by using automation to free up their time, we could actually set a trend. And that's where innovation comes in. Because once you start to automate even just little things in terms of using Power BI or Power Query to automate the flow of data between working papers, you're starting down the innovation route. You're starting to look at things in a different way. You're starting to spot opportunities. And as a result of that, that starts your digital transformation journey. And that's why I like automation to start, because it's something you can do right now with just Power BI, Power Tools training, but then it opens up that world of transformation. It's very easy and quick to get started. So let's dig into the specifics around how to apply it. So we're covering why it matters in the automation space. And you'll see the key here in terms of now is automation. Next, we're going to move on to Trusted Advisor, and then we're going to move on to Web3. So how to apply it. As I mentioned, data extract and report creation. Power BI, Power App, Power Query, Power Pivot, just focusing on advanced Excel is a very easy way to get started with automation. And it's a lot of the training is free. The next slide, which I'm going to share with you, is the Microsoft tools for free training on Power Automate. I've done this many times with my clients, just pulling data from an ERP, making sure it's into the Power BI database stored locally to then populate the reports for management information around tracking inventory, tracking sales, just populating the data for working paper and close consolidate more quickly. It's a really easy way to stop the manual manipulation of data and copying between, literally some of my clients were copying PDF data into a spreadsheet. So if you're doing that, you need to get onto the whole Power BI, Power Automate, Power Query learning. The next one, as we mentioned, invoice approval and payment. So I wanted to break this down specifically for 2 points, the approval and then the payment. And it'd be good to hear from Jen where she got the biggest bang for your buck actually on your invoice processing. But approval, getting rid of those low material approvals, having anything under, say, $100 or $200 just be automatically paid, and then spot checks to make sure it's in line with your expenses. That's going to be a huge win, just frees up so much time. And then the payment, again, when I'm working with one of my clients, we wanted to get rid of checks because processing checks into the bank, especially in COVID times, was actually very expensive and time consuming. So automatic payment using EFTs and direct transfers, we had to move our customers into this automatic payment method. And some of them didn't like it. Some of them didn't want to move away from checks. They liked coming into the office with their physical checks. So what we did to incentivize our customers is we actually offered them, and our vendors, especially our vendors, we actually offered them a discount on the prices. So for the vendors, if they were paid electronically, we would pay them within 5 days, not the 30 days that's standard, but also offer them a discount on the price. We'd also give them a slight uplift on the prices as well. So we gave people incentive to use the electronic invoice processing. And that was a huge win because we shifted the majority of our customers and suppliers from checks to electronic payments, which quite frankly is a win all round. And then workflow optimization. So this is a really interesting one because when you look at your process, you need to make sure that it's going to be automatable. So the current processes are typically designed manually because you're manually working on them. So when you change your process into automated ways, you need to change the process to fit better and be more streamlined. So for example, reporting calendars, understanding when a financial report moves from different people, when it's been reviewed, that's a very manual process, typically tracked in a spreadsheet or on Teams. When you optimize and automate that process, you need to look at how do we make it better? How do we remove some of the approval steps? How do we flow the data quicker? And that's where point number 1 comes in, the data extract and report creation. Because if you look at reporting calendar and workflow optimization, you're combining these for your own better process. The other one is order processing as well. I've done a couple of projects with my clients around how we bring orders in from customers, and then we automate that order status review and then processing for inventory management. So again, these are very easy to do and not with big tools. You can do it with Excel. You can do it with just some very basic Power Automate tools. Okay, so I'm just going to pause there for a second and jump back to the Q&A to see if any other questions pop up. So first one there, how do I start digital transformation projects? Okay, that's interesting. So like I said, start with automation or even just start with the goal of that customer value. So if you're going to start with anything, look at what do you want to change? And this goes to the drivers of your company, where it is in the market, And then also, where is your company goals heading? So for example, if it's a constrained economy and you're looking at cost savings, then start with the cost savings. What then from cost savings, what technology, what could we apply to help with that? And maybe it is the invoice processing, maybe it is the automation. But these had to be small. Again, start small. Think big, but start small. These don't have to be big projects. If you're not doing, and that actually plays the next comment here, if my company resists new technology, what do? This is where that starting small, building momentum really counts. So a lot of work I do with my clients is in government, healthcare, some financial services, and they're very resistant to spending a lot of money and change. So what I often find the best bang for your buck in terms of moving those projects forward is the smaller projects, the innovation, just looking for ways to quickly fix some things and help that process run better. As I mentioned, close, consolidate, report, really easy place to start. And by the way, happy to chat more on this. We've got limited time today, but if you want to reach out on email, please do, because I'll happily jump on a phone, have a quick chat with you on the email. No obligation, of course, just to work through any questions you might have. Okay, so Jennifer, yeah, thank you for replying back on the automation question. You implemented the approval thresholds. Yep, huge win on doing the approval thresholds. And then automation in Canada is so much more expensive than US. Why so? It frustrates me, Rahul. Not only is it automation in Canada, but I find many things in Canada very expensive. I think it's the beauty of living in such a large country, which I really enjoy the space. But coming from the UK, we have so much more choice there around cell phone providers, internet, and some services. So I love living in Canada and have been here many years, but it does frustrate me that many things are more expensive. And I don't have an answer to that other than I think it just takes a bit more effort to move things around the country. Okay, so Kay Kwong there just asked a question around, would you conduct a process review as part of the automation project? Absolutely. So the first thing you do, remember what I said around a bad process automated is still a bad process. The first thing you do is, again, once you've identified that goal, which could be cost saving, growth, maybe we need better data about inventory or sales, or want to speed up the close process from 12 days down to 8 days, which is what I did with my recent client. Once you have that goal, first thing you do is look at the process. How can we rebuild it? How can we make it better? And there's two ways to approach that. Sometimes using the existing process and looking for gaps can highlight some quick wins, but I'd actually do a two-pronged approach. Look at some problems with your current process and how you can fix them with automation. But then the second thing is, if you were to redesign that process, if you were to think fresh, think differently, how might you make it better? How might you make that process run more efficiently? And the reason I say that is because typically processes have been designed over an existence for many years. So when we're trying to automate that process, we're stuck in the old way of thinking, but technology and process moves on. So I would approach it from what can we fix in the current process, a quick win, and then what can we do in a new process if we were just to think fresh. Okay, so just checking the poll and just checking the participants' questions in the Q&A again. Yeah, thanks, Jennifer, and thanks, Rahul, for your comments and questions there. Okay, let's keep going, because I want to leave you with, like I said, I always want to pay it forward, leave you with some active learning you can take away and use right now for automation. So this is the Microsoft site. This is free training. Do extensive training on Power BI, automation, Power Apps. Encourage you to take a look. It's actually really interesting, the power of what you can do with Power Apps. And a lot of it you have with your existing enterprise Microsoft licenses. You don't need to buy much more to start down this path. And if nothing else, you can see what the art of the possible is. And like I said, this is your first step, one of the first steps you can take on your digital transformation journey for very little money and very little effort. Okay, so just quickly check the comments in the chat again. So next, we're going to move on to Trusted Advisor, the second of the three. We talked about automation. We're now going to talk about Trusted Advisor before we move on to Web3 and blockchain. Okay, just before we start on Trusted Advisor, Trusted Advisor is one of my favorites, by the way, but I'm just going to answer this question first because it's to do with automation. So I've got a question here saying, we're looking at e-transfer for payment of invoices as a way to eliminate checks. Any experience with that technology? So I haven't looked at e-transfer specifically, but I have used automation for eliminating checks. So I can, I've got 2 or 3 vendors who I've worked with. I'm completely independent, but I have some views on which vendors are easier to work with than others and which ones have different solutions. But I have worked with a vendor where we eliminated checks as much as possible. It wasn't possible to get rid of all the checks because, as I mentioned before, some customers just like giving checks. So we ended up automating moving the electronic payments it was about 70% of our business, but there's still 30% that had to stay with checks. But in terms of experience, yes. In terms of it was a project, and it took we got a fairly good quick win within the first 4 months in terms of the initial pilot for the electronic payments. But the full project lasted, I think it was about 14 months in total, because we actually found some really other areas to automate as we went through it. So we expanded the scope a bit as well. So end to end is about 14 months, but we got really good results, quick wins within the first 3 months. Again, happy to chat more on this. Just drop me a line. So next, Trusted Advisor. As I said, one of my favorites, because being an introvert, I didn't understand why people didn't listen to my advice. I had so much knowledge to share. I'm an expert in technology and finance and healthcare. And why is it difficult to sometimes convey my point of view? So I read a book called Trusted Advisor a few years ago, and that opened my mind to how we as experts, technical specialists, can really share our value. And the reason this is important is for a number of reasons. Trust matters. As a result of trust, you'll have 40% less burnout if your team trusts each other. You'll get higher productivity because your interactions are more valuable. You're getting more value from each of your deliverables and your interaction with customers and clients. You can have fewer sick days. If you build a trusted environment with your teams and your clients, ultimately your team is going to have less sick days, believe it or not. This is unbelievable findings, but I couldn't believe this, but it's I can see it once we've gone through it. You're going to get 76% more engagement from your teams because they trust you as a leader, and your clients are more engaged with you because they trust you as a trusted advisor and provider of financial information. And then more importantly, less stress. If you're trusted, you know you're coming across well, you're adding value, you get better well-being and better sense of service to others. And as a result, you're less stressed. In summary, when we trust someone, we listen to what they say. You want to be that trusted advisor. So the key question is, how do I become a trusted advisor? And this is where my technical head went when I said, okay, how do I make that trusted advisor formula? How do I come up with trust? And I actually created a breakdown of this. It has 5 C's. Each one has a different meaning. So let's break it down to be how to become a trusted advisor. First one is clarity. The first C is clarity. And that's conveyed in plans. Giving an outline of what you intend to do. Could be a reporting calendar, could be a project schedule, could be just milestones you're going to work with, but it's setting expectations. Connection, the second C. So this is emotional intelligence. This doesn't mean you have to be deeply involved with your client, but it means you're asking questions. It means you're trying to understand and imagining what it's like to be in their shoes. So it's just spending a bit of time, instead of thinking about ourselves, it's more thinking about them. And like I said, the easiest way to do that is just asking questions. Credibility, number 3. We do this in spades. We're all experts. We have credibility. We wouldn't be accountants. We wouldn't be finance professionals unless we had credibility. But we need to convey that credibility. We convey that in words. And typically that's through offering options. It's not about being right. It's about getting to the right answer. Because although we may be right in terms of an accounting standard or a number or a financial result, it's got to be right for the customer and the client. So understanding what they're looking for from that number, that's when you get to the right answer. And that's true credibility. Consistency. This is the easiest to do of all the 5. If you want to build trust quickly, just repeat your actions. Be consistent in terms of when you say you're going to do something, do it, or let them know it's not going to be done and here's why. And maybe this is just doing the same report every month on the same date. If it varies, letting them know it's going to vary. It's about, again, it's seeing the actions. It's about showing up. And the fourth one's the easiest from consistency. The fifth one is contribution. This one's actually the hardest because you have to convey value. And we all think we add value, and more often than not, we do. However, true value is in the eye of the beholder, the eye of your customer, your client, your manager, your colleagues. So how do we understand that value? We start by asking them. We understand what they do and how they do it. And then we can make sure that financial report is in a format that works for them. It's delivered on time for them, rather than just assuming a certain date or telling them a certain date. So I'm just going to pause there again because trust is very emotional. It's very subjective. But what I wanted to do here is help clarify what trust is by breaking it down to 5 clear steps. And this is actually an extract from a much bigger 2-day course I do in how to be a trusted advisor. But I wanted to give you the Coles notes now. And I'm happy to take questions on it or hear from you in terms of what does building trust mean to you? And I'll just pause to look at the Q&A and see if there are any comments around being a trusted advisor. Okay, not seeing anything pop up. I will keep an eye on the Q&A because, again, trust is a huge area. And we as accountants, financial professionals, being a trusted advisor is by far becoming the most needed skill going forward because it's not about the numbers anymore. As we get into digital transformation, automation, the technology is taking that number accuracy away from us. We don't need to be as accurate with numbers because the technology is getting better at providing those numbers. Probably doesn't feel like it right now when we have to fix those Excel spreadsheets on a daily basis, but eventually it's getting there. And this is where trust comes in. Trust is where the real value is for accountants and professionals. So let's do a quick poll then. So we've just gone through the 5 C's. I want to just quickly test your understanding with a real quick quiz. So you're at a client meeting and you want to say something that's going to build trust. And there's 4 choices there. So what would you say to build trust with your client, with your colleagues, about metrics, about research, about articles, or would you say something else and comment in the chat there? So we'll just launch that poll. And I just saw a question pop up as well. I'll answer in a second. Okay, we'll give the poll a few more seconds and then we'll display the results. And then, Michael, I'll come back to your question about getting a seat at the table. Okay, let's display the poll results. Let's see what people are saying. Okay. What metrics are important to you? Yep. Again, asking them a question straight off there. I'll do some research, come back with options at 32%. Yep, great one again. Because we're going to come back. We're showing that we're going to add value and also being consistent and also setting expectations by giving clarity. 6% saying, I read an article I think you might find interesting. And then 2% other comment in the chat, which I think was the question there. So yeah, great answers, folks. That was a really good way of responding. Well, it's always what I said, the reading an article and coming back with something that I think you might find interesting. That's actually directly part of number 5, the contribution. It doesn't surprise me that only 6% said that, because it is actually the hardest to do. What you need to know is that that's actually the biggest value you can, the biggest bang for your buck in terms of the trust, because not many people do it. As we just saw, 6% said they'd do it. So if you just shift a bit of time towards that contribution in terms of thinking about what they said and then following up with another article or a bit of information, that spontaneous outreach, that proactive outreach, you're going to put yourself ahead of the others. So Michael, you're just going back with a question. How do you gain a seat at the table to become a trusted advisor? So great question. It's not easy, because the thing about trust is it's very difficult to measure. But what you can do, and I'll show you a quick chart on this. Actually, I'm going to I'll send this in the pack. Actually, there's a quick chart in terms of how you measure the levels of trust in each of these 5 areas. But what I would suggest is, and what I do as part of the training course, is take each of these 5 and just consciously think about them every day. So how, at the beginning of the day, think, how am I going to create clarity? Who am I going to connect with? What's intentional outreach? And that could be a colleague, a friend, member of the family, even just a customer. What intentional outreach am I going to do for connection? How am I going to build credibility? How am I going to be consistent today? And how am I going to create contribution? And what you'll find over time is that people's perception of you will shift. You'll start to build up that trust. And that's how you get a seat at the table. It's not a sudden you're trusted, you're in. But over time, and that's why trust takes a long time to build up sometimes. But you can accelerate it by working through these 5. So hopefully, Michael, that answers your question. But happy to chat more on this. If you want to drop me a quick note, or ping me, I'll happily chat. And by the way, I'm doing a pod later on at I think it's about 10 past 4, 4:30, and I'm happy to chat more and deep dive into any of these topics later on. Okay, then Timothy here had a question or comment around, did the author of Trusted Advisor comment about the face-to-face meetings being better forms to gain trust of clients versus digital meeting forums? So yes, you're right, Timothy. In person is always going to accelerate any trust building process, any relationship building. And the reason for that is because you're seeing body language much clearer. So it's not to say you can't build trust over remote digital meetings, but it's easier when it's in person. You're probably asking, well, if we're moving to the interactive metaverse and Web3, where everything's going online, what does that mean for building trust? It means we have to spend more effort and time building trust in these digital environments. So it is possible. It just takes a bit more effort. And there's what we're missing in terms of those interactions in real-time body language. We just have to follow up with more contribution, more consistency, more clarity, and more credibility. Okay, just a comment from Colin there as well. Building trust in a board meeting. Depends if I'm a new advisor or have long relationships. Either way, I ask a few questions to understand the client's long-term objective, why the issue is important. Once a response is received, then provide an observation from my perspective. Awesome. That's great, Colin. That's for anyone on the call, take a look at Colin's response there, because that's a real good example of how you can build up trust by asking questions, understanding their perspective, and then giving an observation or your perspective. And that's a really great segue into trust building tips. So I always like to leave you with something you can take away for each of these sections. So similar to Colin's point there, ask questions, listen, understand what they're trying to mean. And if you're not sure, just ask questions. It's so easy to jump to, I have to be right, I have to know. I had to learn this a lot, is I don't have to know this straight away. I can ask more questions. And then share an agenda, ask for input. Here's what I'm thinking of talking about. What do you think? And then as Colin rightly points out, they give an opinion. It doesn't have to be a fact or has to be right. It just says, I'm thinking this about this financial number in this report. What do you think? Step outside your area. Meet other people, meet new people in different departments. Getting that different perspective will help you with different ways to build trust because you're gathering more knowledge. And above all, relaxed. Just have a chat with people. Doesn't have to be formal. Don't try and break it down too formally. Just have fun with it. Be curious. Okay, so we covered trusted advisor. And I know we're going through a lot today, folks, but I've so much knowledge I want to share with you. So if this is going a bit fast, again, we can always chat more, and I can send you a copy of the slides. And if you have questions, we can chat afterwards. But I want to move on to Web3. So this is now in the future. We covered automation, which you can do today or now. We covered trusted advisor, which you should look at next. Web3 is in the future. So just to caveat this, it's very few of us will be diving into Web3 right now. And so what I want to do is highlight that you should be what you need to be aware of, because knowing about the future helps you guide your actions for working towards that future, because this is important. And the reason it's important is because there's a Web3 evolution here. So let me show you what Web3 means, and then we'll get into how fast it's adopting. So Web 1 was read-only. This is back in the 90s, early 2000s, when you observed the internet. You saw static websites, Yahoo, Netscape, AOL, for example. It was unidirectional. You had one direction. You basically clicked on links and read, and that was it. Web 2 is the best known web because we're in it right now. This is 2002, 2003, all the way to present day, and we'll keep going for a few years yet. This is where you're a participant. So you upload, you co-create information and store it on a website. So for example, you put content on Facebook, you put content on YouTube, you put it onto your website for blogs, you share information for others onto the internet. So it's bi-directional. You read and you write. The problem here is, or not problem, depending on your point of view, the constraint is that the YouTubes, the Facebooks, the Twitters of the world, they own your data. That's the constraint. And people don't necessarily like that because they're monetizing your efforts. Although you get a cut of it, YouTube gets a lot more revenue from your video postings than you do. So this is where Web3 comes in. So Web3, it says you're a developer. I actually don't like that word. I actually like participant. So you're a participant and an owner of the content. So you contribute data, but more importantly, because you retain ownership of that data, you can then benefit from it as well. The key to Web3 is it's blockchain enabled. And the reason for that is it becomes much more secure, much easier to manage data and attribute you as an owner to that piece of data. So if I post a video onto YouTube, for example, the ownership of that video is very easy to prove was me if it's stored on a blockchain related technology. More importantly, I can share that video to other platforms very, very easily. Whereas now it's with YouTube, you have to upload it to each one. Whereas with Web3, the power comes back to you. So if you take nothing away from this, Web 1 is read only, Web 2 is read write, and Web 3 is a participant. You own and participate in the data. And the reason, and just to explain this a little bit more, and just again, real high level, because this is a massive topic and it's changing daily. If we look at blockchain at the bottom here, if you want to know what Web3 is, think of it in terms of NFTs, non-fungible tokens, smart contracts, cryptocurrency, and decentralized finance. If you want to think, if anything to do with industry and enterprise, these are the four key areas where Web3 is going to drive business forward. NFTs, non-fungible tokens, in terms of owning the data and proving that ownership. Smart contracts in terms of making a result. It's a very mechanical way of saying, based on this information, I will produce this result. Similar to a vending machine. So when you put money into a vending machine, put in the code, and you get your snacks, a smart contract does that. It automates that process. But the key is the data is secured on blockchain. So we can apply that to much more complicated financial matters and much more sensitive data. And then cryptocurrency. Depends on your views on cryptocurrency, but bottom line is your clients will be asking about cryptocurrency. What does it mean? How do I account for it? How do I value it? So doing a bit of research around it. Again, going back to that value in the C for contribution in trusted advisor, that means you can then add more value by understanding what it means to use cryptocurrency. And then decentralized finance. So I'm going to come on to that in a second. So I'm going to pause the thoughts on that one. So 1 second, I'm just going to look on the Q&A and chat, see if anything's popped up. Okay, so let's keep going. So I do want to show you this. So you might think Web3's part of the future and don't need to worry about it now. And that is true. However, crypto adoption, so this is cryptocurrency, which is built on blockchain, which is a foundation technology of Web3, is very similar adoption to internet back in the 90s. So internet in green here over the 90s to 2000, that adoption versus cryptocurrency users just going up this year almost mimics the adoption of the internet. It's scarily very similar. What that means is this is gaining momentum. So whether we're part of it or not, it's happening. So what I would advise now is just be aware, do some research, have a chat where I can happily share some knowledge of this. I'm learning this stuff every day. There's so much, so fast happening on this, but YouTube is a great resource. Ironically, for a Web 2 solution, YouTube has a lot of great information around this. But what does it mean to be, for us as financial professionals? Let's make this real. So smart contracts. I love this example from Fizzy, which is an insurance for flight delays. So this is built on a smart contract on blockchain technology. So we enter our flight details. We then personalize the coverage because the blockchain can know our data and validate it. We then purchase that insurance using NFTs or some cryptocurrency quickly, or even just regular currency. We can do that as well. But here's the trick. As soon as that flight's delayed, the smart contract knows about it. It doesn't need someone to process it. It pulls in weather data, pulls in flight information, pulls in airline information. Then it knows the flight is delayed. And as a result, instant payout. And that's the beauty of a smart contract. When it's built properly and securely on blockchain, it's all automated. And this is why it cuts out the middleman and is lower cost and better service. Here's decentralized finance. And I'm moving really fast, folks. I know I'm covering a lot of information. I'm just conscious of time. So what I will do is I'll move quite quickly, but I'll happily pause at the end for any questions. So centralized finance is conventional. So we as a consumer interact with banks, regulatory boards, government, to the people behind the banks running the process, ultimately to pay someone else, pay a bill, pay a friend. Decentralized finance takes all that away. Enables us to use blockchain to pay people directly. So the middleman is gone. This makes it the power. Again, remember participation and ownership. We own that data. So we're working with decentralized organizations which use blockchain technology to pay payments faster and quicker and anywhere in the world. Can criminals exploit it? Yes, they can. Do they for every single blockchain? No. There are some good quality, secure blockchain smart contracts and decentralized finance out there. But like everything, it's a bit of a wild west at the moment. So there are some bad actors. So I'm going to pause here quickly for any questions, because this is a huge topic, folks. And my goal is to just make you aware and hopefully give you a taste to look into this in more detail. But I'm happy to answer any questions now. So 1 second. Okay, so Isabella there is saying, what do you think the timeline is for business to start using cryptocurrencies as a method of payment? Really interesting. So there are businesses using it right now. There are governments that are investing into crypto. So it is becoming more and more popular. In terms of transactioning in the high street, for example, or Amazon, for example, my guess is it's going to be 1 to 2 years. It's not going to be long. The reason I say that is because it's gaining so much momentum. If we go back to this chart, you'll see here that the crypto users are going to accelerate up very quickly to 1 billion users. So the Amazons of the world are going to say, hey, there's a market we could use here. So notwithstanding the whole cryptocurrency volatility, stabilization, the security issues, that is starting to mature. So I'd say in the next 1 to 2 years, more and more companies will start to use this. It's very early days. There's going to be a lot of finding things out. I think it's going to be really interesting to see where it goes, but the adoption is going to be fast. Okay, let's go back to the questions. Just quickly check. Okay, so we've covered a lot there, folks. It's we covered the automation, trusted advisor, and Web3, and then just before we move on, there was another quick question from Kara there. Kara, do you think DeFi will ever start or completely phase out the use of cash? Interesting. Short answer is no, because the same way that credit cards, debit cards, EFTs have not got rid of cash completely, there's always going to be a cash society. There's always going to be a need for instant transactions with fiat currency. However, I think DeFi will accelerate and the growth. I think it will gain much more momentum. And this is where governments have got to ultimately take notice and decide what they're doing. It was interesting that the US government seized several hundred bitcoins recently from a fraud case, but they kept them. They didn't give them back to the defrauded people. They were solving the crime, but now the government has several $billion in Bitcoin. And I think that's a neat way of them saying, okay, we're going to start to get into cryptocurrency. So I do think it'll ultimately grow. I don't think it'll phase out cash completely. Can you provide insight on why there are 12,000 types of cryptocurrencies? So David here has a question. Why are there 12,000 types of cryptocurrencies and why do we keep creating more? And that's because, again, remember Web3 is participatory and anyone can own the data. Anyone can create a cryptocurrency. But with anyone creating that cryptocurrency, the choice is how many users of that cryptocurrency are there? Which one builds critical mass? Which one's most secure? So there's 12,000 out there, but over time, they're going to start to fall away. We're going to have the runners of probably top 5, Bitcoin, Ethereum, for example, being right up there, Solana. So we're going to start to get more quality, popular cryptocurrencies come out. But in answer to your question, anyone can create one. So that's why there are a lot of them. It's a bit of a wild west at the moment.
Well, thank you very much, John. I am here to help wrap up the session. Obviously, this is a very, very interesting topic for a lot of us. If you want to just stop sharing for a second, that would be great. Otherwise,
For sure. I just want to just 2 things deeper real quick, because I know we're up on time, but just real quick. So I'll share this pack with people, which has this technology evaluation checklist, which I promised at the beginning. Again, just email me at john@wedeliveryourvision.com. And then we're doing a workshop tomorrow, which some of you are registered for. But if you haven't registered, don't worry. Again, just reach out to me. I'll quickly send you the pack and cover the Coles notes with you.
For sure.
Thanks.
Yeah, and remember that there is John is hosting a conversation pod later today. So if you want to have a little bit more of an intimate conversation, again, there's very limited spots, but you can certainly try to do that too. So thank you, John, for taking time today to share your experience and your knowledge on digital transformation. Everyone's at a different point in their journey, and I think that your presentation definitely affirmed that it's never too late to start, and that everyone, can start somewhere small or big. So that's really wonderful. Yeah.
Yep.
So just a reminder to everyone in this session that all of the sessions from today's conference are recorded and will be made available for viewing until June 30th. So you'll be able to come back and rewatch this session or even watch another concurrent session that you may have wanted to attend as well. I would ask that you please make a point to fill out the survey right after this session as well. It'll pop up when we're done. And remember as well that you can earn points towards an entry in our raffle prizes by scheduling and accepting meetings, sending a message, or completing surveys. If you haven't had a chance to swing by the exhibitor booths, there's just a few, so that would be great if you wanted to do that. We are just about to head into a 20-minute networking break, and this would be a great time to navigate around the platform here and familiarize yourself if you haven't already. And just keep an eye on the clock because our tech talk starts with Obed Maurice at 3 o'clock. And that will lead us after that into a quick break before we head into our final keynote speaker today. So have a great rest of the afternoon, and thank you again, John.
Pleasure. Yeah, and highly recommend Obed Maurice. See his presentation.
Wonderful. Thank you, John.
Thanks.
Bye-bye.
Bye for now.